The Canadian economy is booming. Yes, it has posted a 2.1% growth in Q2 in 2024, and it has also beaten the market expectation. In Q1, it was initially reported 1.7%, but then it was revised upwards later on to 1.8%. So all good news, right? 1.7% initially reported in Q1, revised upward to 1.8%, and in Q2 we have just posted 2.1%. Impressive. Where is recession, Yasin? You have been beating the drum for the last few months that we are in the recession, but it doesn't look like a recession, right? The economy is booming, right? Right? Well, not so fast. It was all good if we had a consistent population in the country, but the population is exploding in this country, and if you don't measure compared to the population growth, you are doing an injustice to yourself and to the nation as well. So let's take a look under the hood. Okay, so when you adjust this with population and you calculate GDP per capita, the real GDP per capita, because you have to adjust with inflation as well, then the real GDP per capita declined 0.1% in Q2. And Stats Canada noting that it was the fifth consecutive decline quarter over quarter over quarter. Okay, and if you look at the last 8 quarters, 6 out of them is in negative growth. However, the trend is showing it is going to flip at some point, but you don't have to be very optimistic, to be honest, because the unemployment is 6.4, which is the highest, since pandemic times, and even going back to 2008 levels. And even if we give a benefit of doubt to the economic activity, 80% of this consumption, this spending, is coming from government. 80% of that. So if you remove the government spending out of the equation, we have no spending going on in the economy. Okay? Further, we look into that and we realize that the household spending has weakened, compared to previous quarter. And the Canadians are spending on more necessities. So household spending, it grew 0.2% in Q2, slowing down from 0.9% in Q4. So from 0.9% in Q1 to 0.2% in Q2. So the Canadian household spending is literally contracting. If we also take a look at the Canadian housing investment, which has been a big portion of the Canadian economy for the last 20 years, okay? But now we are seeing a real negative growth in the household investment, okay? So residential investment fell 1.9% in Q2, making the most significant drop in over a year. Leading the decline were now construction, minus 1.6%, renovations, minus 2.6%, and the ownership transfer cost, which is basically the land transfer tax that we pay to the government. That is also down minus 1.1%. So the real estate industry has been a power engine for Canadian economy for the last 20 years. Now it is showing a real negative growth. Okay, why? Because the real estate transaction has been lowest in the last 20 years. Even the rate cuts is not stimulating it yet. While we are seeing the rate cuts coming from Bank of Canada, why the housing market is not turning? Well, the reason is you have to consider household income, you have to consider unemployment, you have to consider the sentiment, the buyer sentiment in the market. If you are not sure about your job, that you can still have your job next month, you won't be considering putting an offer on $1 million house. Simple as that. Okay, the sentiment right now is negative. I have traveled a lot of cities recently. I was in Las Vegas for one of the major conference, and the sentiment, it wasn't positive. Whether the government declares we are in recession or not, the numbers are telling you the fact by itself. Okay, if you remove the government spending, which is 80% of the total spending in Q2, you have nothing left in the Canadian economy. The residential investment has been one of the power engines for Canadian economy for the last 20 years. It is now contracting. Anyway, you let me know what you think about that. Put your comments down below. You let me know, how are you protecting your investment portfolio? How are you protecting your purchasing power in a downward economy and a inflationary era? And I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.